Nolan, good to see you. We are diving into the headlines today with markets and geopolitics. The question is, when will stocks recover? Rising tensions in Iran have pushed oil prices higher and created short-term volatility in the markets. Historically, however, geopolitical conflicts tend to have only a temporary impact on stocks. Let's get into it. But I want to start by taking a look at this chart from FinViz, which shows the past 6-month performance of the S&P 500. We see a lot of colors here on the board, Nolan, but the question is, why do we tend to see stocks fall first when tensions rise?
Thanks, Erin. This is a great chart to look at. The reason that we're talking about the past 6 months is because the past 6 months, the market's essentially been flat. You can see, some red here, some green here. The red's bad, the green's good, obviously. You can see specific sectors that have had a very bad 6 months, technology and financial being the two main ones. But the market kind of levitated by the performance of semiconductors and communication like NVIDIA and Google. So you can see how maybe just a couple companies are kind of balancing each other out. Apple's had a good 6 months too, but a mixed bag across the board. The market's essentially flat. Why stocks fall first when tensions rise is because stocks are typically reactionary investments. Bonds are safer. Bonds usually are economic drivers. They help set economic policy, monetary rates, free flowing cash. They are the kind of leading investments. Bonds are. Stocks are reactionary. So once an event happens, once like Iran's targeting some technology data centers, that will negatively impact some tech stocks. So we'll get into that maybe a little bit today too.
So history shows the S&P usually recovers relatively quickly from geopolitical events. So I want everybody to take a look at this chart here, which lays out several geopolitical events and mostly short, shallow pullbacks. Talk us through what we're looking at.
Yeah, so what this shows you, the blue dots basically are the events, and on the left axis, the x-axis, what we're looking at is the main drawdown from these events. The worst ones being North Korea, South Korea in 1950, the 9/11 terrorist attack, Pearl Harbor, the 90 invasion of Iraq into Kuwait. So there are a lot of events that cause these big drawdowns. And what you see on the y-axis is how long it took to recover from these events when the stock market went down. And as you can see with most of these events, even with the really significant drawdowns, less than 100 days, less than 50 days in most of these events. So what this is to show you is these are relatively shallow pullbacks. Most of the time, you're not losing more than 5%, 10% in the market overall, and it takes a month or two to recover that. I think it's important to be patient and practice good fundamentals during times like this.
So it bears repeating though. So investors who are watching these headlines, Nolan, and it feels like we're in the thick of it, right? We don't know when it's going to end. What is the most important perspective we should keep in mind before making portfolio decisions?
Well, could you do me a favor and bring back up the FinViz chart that we just went over?
Sure.
Yeah, I think when we look at what to do, what to keep in mind before we make financial decisions, it's important to understand what role these headlines have in the overall market. So we're looking at the S&P 500 here. When we look at oil, when we look at energy, when we look at that sector, that is the little energy sector on the bottom right there. It's a very small portion of the overall market. It's important to look at how that sector performs and its effect on the other sectors before you go make portfolio decisions. So if you are of the thesis that this oil shock is going to cause a tech crash, I would remove tech from your portfolio. I wouldn't necessarily connect those dots right away, but you could convince yourself of that. So it's just important to know what role energy has in the overall big picture. The FinViz chart's just a good example of, I don't know, it's important, but it's not the biggest thing that's driving the stock market right now. It may be impactful from an economic standpoint, but maybe not from a stock market impact.
Right. It's hard to make decisions when we are, again, in the middle of it based on data as opposed to based on, just the fear that we're feeling. Can you explain the dangers of emotional investing?
Yeah, emotional investing is just the buy high, sell low mentality mostly. I mean, it's just doing the opposite of what you're supposed to do. So it's just important to understand what point the market's at, what point you are at as far as your feelings of the overall stock market. If you are at a point of fear, depression, panic, you're getting towards the point of maximum financial opportunity. And that's what a lot of people are feeling right now. When you see war in headlines, when you see updates like we've been seeing, you've started to see tech be targeted in some ways, shape, and form. These are things that can lead to fear and capitulation. So it's important to understand that these may present buying opportunities, not selling opportunities. And again, practice good fundamentals, make sure that you don't do the wrong thing at the wrong time.
Right. Well, and it all comes back to having that plan, right, where the volatility is built into it. So we're not making those emotional decisions. Nolan, if somebody wants to talk through either how they feel or making sure they have a portfolio and a plan that's in line with their risk tolerance, what's the best way to reach you?
So by phone, 616-301-2581, or on our website, Cornerstone-RP, there's a contact us box at the bottom of the page. You can fill out any question that you have there.
Great. Nolan, thank you so much for your time today. I appreciate it.
Sure. Thanks, Erin.